The following amounts appeared on the Mullen Company's adjusted trial balance in alphabetical order as of November 30th, 2017, the end of its fiscal year. A physical count shows that the cost of the ending inventory is $6,100. So what is going to be the inventory, the merchandise inventory opening balance? This $5,600, yes. Because it has not changed since the last one. Merchandise inventory opening. And what will be the closing balance? The $6,100. So, on the next page here, we're going to do all three of these calculations right on the income statement. So the multi-step income statement. So we'll start with the title, Mullins Company. For year ended November 30th, 2017. So what we need to do is start with our sales. So we have sales of $276,000. We then need to determine our net sales. So to do that, we need to less our deductions. Our deductions in this case are our sales discounts and sales returns and allowances. So we have $2,350 for our discounts, $28,500 for our returns and allowances. And we have net sales of $245,150. We then need to determine our cost of goods sold. Our cost of goods sold. And that starts with our merchandise inventory. Opening balance. Merchandise inventory opening was $5,600. We then have our purchases. And our purchases were $120,000. And then we need to determine our net purchases by lessing our purchase discounts our purchase returns and allowances. So 1-1. So it's 5,200. And we get our net purchases of 114,800. We do need to add any expenses that are related to preparing our inventory for sale. So our transportation in, that is the only one. So we can add our transportation in. And we get our cost of goods purchased. Now when we add up our merchandise inventory opening balance and our cost of goods purchased, which, whoops, should be actually right here. We get our cost of goods available for sale, or goods available for sale. And we can less our merchandise inventory closing balance. And that brings us to our cost of goods sold. $119,150. So our net sales minus our cost of goods sold brings us to our gross profit from sales. We have 126,000. So we have our Gross profit from sales. Now we have to go to our operating expenses and our other income, which is always going to be the same, whether it's periodic or perpetual. So our operating expenses. Starting with our selling expenses. So let's just have a quick look and see what here. So we have our advertising expense is selling, interest is an other. Rent expense, this is a selling slash general. Salaries is selling slash general. Supplies is selling slash general. So we can start listing out our expenses. So we have advertising for $3,000. Rent, salaries, and supplies. Now the rent expense says $38,000, but only 75% of that so $28,500. Salaries only 60% of the $62,000. $37,200. And supplies only 80% of the $67,000, so $53,600. So that's our total selling expenses. So when we add these up, $74,060. Now we have our general and administrative. Expenses. We've got three. We've got the same here that we just had. Rent, salaries, supplies. Now rent was 75% selling, so that means it's 25% general and administrative. 9,500. Salaries is 40% general and administrative. And supplies is 20%, so 0.2 times and we get our total operating expenses then I get our profit. We're going to run out of space here, so I'll just keep going into this spot here. We have our profit from operations. We got 16,300. Now we just need to do our other revenues and expenses. So here we only have an interest expense. So I'm just going to add that here. We're $350. And we get a final profit of $15,950. No, that's not right. Oh yes, that is income from yes, perfect. That is right. So we ran out of space. I took the title section of our next part. So just imagine, we can still make the title work actually. Mullins Company. Income statement. For a year ended November 30th, 2017. Now here, all we're doing is taking all this information and making it really simple here. Let's take our revenues. We've got our net sales. Which was 245, 150, and then we just list out our expenses. We've got our cost of goods sold, selling expenses, our general and administrative expenses, and our interest expense. So cost of goods sold was $119,150. Selling was there we are. So it's just the exact same information. It's just given a little with a lot less detail.